I promise you. I fucking guarantee you, you will absolutely know what the hell you're doing come November, but you have to show up every day. Stop dancing around and adding shit to this. Oh, I'm going to bring supply and demand thing to this. I'm going to bring Elliott Wave to this. Stop. Leave all that stuff at the door. If you want to pick it up when we're done in November and add it back to everything else, go right ahead. At that time, I don't give a shit. But while we're doing this, this is all that matters. This is it. This is the truth. Nothing else matters but this. You cannot argue. You cannot resist it. It's being shown to you beforehand. You guys bitched and moaned. Oh, you'll never see him go out here and live stream. You'll never see him outline all this stuff because it doesn't work. Dude, I'm doing it every fucking day. Every day. Like clockwork. You can set your watch to me. It's perfect. That's how you would expect it. If it was an algorithm, wouldn't you expect it to be like this? Some of you are thinking, what the hell just happened? This guy's usually putting me to sleep when I'm watching his videos. Oh, yeah. Well, this is what it's like when I'm live. I'm bipolar. And if that bothers you, go somewhere else. I can't not be me. But we're talking about something that I'm passionate about. I'm absolutely passionate about this. I'm passionate about your success. I want you to succeed. I want you to make money. I want you to stop working and do this on your own. Carve out your own fucking paycheck. I want you to have that. Don't you? Don't you want that? Are you here just playing around? Because if you're here just watching shit on YouTube because you're fucking bored, you're wasting your time. You're wasting your time. This is going to keep working. Until they take away the markets entirely, it's going to keep working. The market's not going to change the algorithm. I ain't changing shit. It works perfectly. Is it going to be hard in the beginning because you have all these other things that you're trying to wrestle with? Absolutely. Just like it was for me. I had all kinds of dumb stuff. Books and courses and things that I thought made things go up and down in the marketplace. It's all dumb. It's stupid. And some of them have really good marketing. They make you think, wow, this is it. This is the thing I've been looking for. No, it's not. It's the thing you're being distracted with right now. And when you see, unfortunately, a little bit of success in it, and you falsely attribute it like a religion. Oh, the market went up because my harmonic camelback said it was going to go up there. Man, get out of here. Get out of here. Animal patterns have nothing to do with billions of dollars at risk. Okay, I'm sorry. It doesn't work like that. Doesn't work like that. The market's going to go where the money is. If there ain't the money in there, they're going to engineer it. That's the way it works. Above that high right here, buy stops. Somebody's short. We don't know. Retail Rick, he's short here. He's going to put a protective stop loss in there because the books say put your stop loss right above the high. He feels great when it goes down. He's going through all this chop. He's thinking, okay, maybe it's just one of those moments where I have to wait. ICT talks about this right here as a fair value gap. I got to trust it. He don't know what he's doing because he watched 3 videos and now all of a sudden he's a professional, right? The market drops down. He's thinking, all right, I'm all in now. I'm adding to it. It's great. Go watch TV. Go play golf. I'm going to be good for the rest of the day. My stop's in place. What'd he make? A mistake. He traded with logic that doesn't work. He doesn't know about the new week opening gap. He doesn't understand liquidity. He doesn't understand the facts that this day is going to be consolidation because of the Fed. The market's already delivered this week, folks. It went to that dollar objective. It's non-farm payroll week. Who's in the hurry right now? Who's in a hurry? What big money entity was going to think to themselves, you know what I need to do right now? I need to take all of our customer assets and put them at risk because non-farm payroll Friday is lit. We got to get in there and make all the money on Friday. Let's get in there ahead because, it might be a big mover. I'm sorry, but that's not how this business works. Sorry. A lot of you bring comic book logic to trading when you need a PhD level education. You need to understand how the human mind thinks, how it behaves under pressure, when it's in reward. They feel like they can't lose. And that's why you see these sudden rips other direction. They don't want to give them the chance to realize they're wrong and collapse their trade and before removing what? Just like spoofing on the depth of the market, they don't want them to pull those orders. So what happens? They have to run for them aggressively and quickly. Otherwise, they can't participate and utilize them as counterparty to their selling of their long position they accumulated down here where I told you. Folks, that's not complicated. That's not complicated. That is not complicated. So there's this dance that's always occurring between inefficiencies and liquidity. Premium to discount, discount to premium. Always. That's what's occurring. It has nothing to do with harmonics. It has nothing to do with bullshit animal patterns. It has nothing to do with Elliott Wave. It has nothing to do with anything that you see in a retail book. Price is not moving on any of that bullshit. That's not what's going on, folks. And buying and selling pressure is not it. That is not it. Your market profile, your volume bars turned vertical. Okay, so you're looking at them over here. Okay, you're looking at that, and you're looking at level 2 data, and you think that makes you smart or that makes you in the know. That is a gimmick. It's a red herring. You're looking at stuff and you're not seeing the things I'm showing you. Look, I'm showing it to you in a 15-second chart. Think about it. 15 seconds. Price is behaving in a way in which it's been coded. It's behaving as it's told. It's not being pushed around because buyers and sellers. That's not what's occurring here, folks. Sorry if that hurt your feelings. I'm sure some of you worked in an industry and you feel like you're part of the team and all, but you have a title, but you have ignorance. You have no idea what makes these markets go up and down. And I don't care about titles like that. So this is that low of those 2 up close candles on the 15-minute chart. I'm extending it forward. Can you see visually how that's essentially half of this range right there? That's why it goes right up there and stops. Not because Gann said so. Not because there was a wave that Elliott rode in on. It's not supply and demand. It's not harmonic. It's nothing else but the algorithm. Okay? The price goes right to that price level and stops dead in its tracks. Like some invisible force field said, no, you shall not pass. That's why this level here stays open. Doesn't need to go up there. Why? Because the order block is the change in the state of delivery. It stops right there. So that means all this price run up above these buy stops here. It goes above to engage those buy stops, yes. But does it go up to some random level? How do you know how far it's going to go when it's running stops? I'm doing this. This is technical science. I'm reading everything in the price action. This candle's closing price is 4111.75. I told you, watch this volume imbalance. It trades up into here. What's the high of that candle here? 4111.75. Perfect. Perfect, folks. Please don't come to me with this Mickey Mouse shit, supply and demand. It's nothing like that. It's nothing like that. When students sit down with me, and when I was doing one-on-ones in the late 90s, when I sat down with them and I was doing this with the bond chart and I would do it with the S&P, you should see their face. I mean, it's probably what your face looks like too when you're seeing it live and you watch it happen. You're looking around the room like, am I supposed to know this? Like you're waiting for the knock on the door, like the men in black are showing up. Because it shouldn't be this perfect, right? But yet it should. If the markets were really designed for your embetterment, it should be something like that. It's an investment. But they treat it like, let's turn it into casino. Let's turn it into a casino experience where they blind you by never having windows, never a clock, because they don't want you to know how much time you've wasted losing money. So how do they hide this stuff in plain sight? Indicators, baby. Indicators. And in case you don't like the indicators they've already pushed on the masses, they're always bringing what? A new round of indicators. They're already starting to do it with my stuff. Here's a fair value gap indicator. It's bullshit.
It's bullshit. You're not even bringing in the most important criteria to that. You can have a fair value gap indicator. It's going to give you every single one of them. And you're going to look at that and think, what? It's overbought, oversold. It's overbought, oversold. And you're going to lose money. And you're going to say, oh, this ICT, he's a scammer. He can't ever do this live. He'll never live stream and call these moves. I'm doing it. And you're still plugging your ears and closing your eyes. So because this is a balanced price range, why doesn't it have the necessity for price to come back up into that pink area? Why shouldn't it go up there? Because the price has done what? It's delivered pink down, then up, then down. Buying and selling pressure had nothing to do with it not going back up into that level. It didn't even come back to touch the bottom of the range, which is this old low here, which is what? Classic support and resistance, right? Classic support and resistance. Support broken, turns resistance. Well, you missed the party. See you later. And pair up as a counterparty, as a short to that buy stop, just like the composite man does. Then he sits back and he waits for new opportunities to engage it as it works towards that lower level discount, that 40, 29, 50 level, and the liquidity resting below it. They don't freak out every time it rallies up. They don't think, oh no, that harmonic shark back pattern got my ass again. They're not thinking about any of that stuff. It's mythology in trading. There's no wave counts to consider. There's no diagonal trend lines to worry about having them correctly annotated on your chart. It's submission to what? Time. Even though we're not trading NQ, I said, this is how you would use this and study this one. And it did exactly what we said we were going to see, lower prices. But the fact that the bodies were unable to book at consequent encroachment, which is the midpoint of that range, that was the signature that you're not seeing in books. Elliott has no idea of it. Gann has no idea. Wyckoff had never heard of it. Supply and demand, no, nothing. None of that stuff. The fact that it failed to get to that level when it's likely to go for sell side below this low here and make a lower low, when everything else in the market was indicating it should do it anyway, your eye goes right there like I'm teaching you like mine does.
That we can predict price. We can do it very precisely. Like scary precision price action. And again, that wouldn't exist if the markets are all moving by supply and demand, buying and selling pressure. There's no way, absolutely no way, that you're going to convince me or anyone else that has a brain that random buying and selling pressure based on a myriad of different trading styles and applications, which one is the market following today? Which logic did it use today to book that high? Which logic did it use to make that low, that candle right there? What framework did it use? Did Wyckoff tell you the time it was going to do that? Did supply and demand, did Sam Seiden tell you the time that this candle right here is going to form and do that very thing and lead to that run up into 41, 45, 25? It's not anywhere else.
Where did it go back to? That weekly inversion gap, the fair value gap that we anticipated seeing it act as what? Support. Folks, that's narrative. That's not picking both sides of the marketplace. If I'm telling you a specific PD array, that level on that PD array, if it's a range, like a fair value gap, it's the high, consequent encroachment, which is the midpoint, and then the low of it. That's not a zone where it's ambiguous. Like, where do you trade a supply and demand zone? Okay, that's why I'm not supply and demand. And I also cut through candles. Supply and demand would not use this level over here based on anything like that because they say we don't cut through candles. They need a fresh zone. Everything from ICT is fresh, baby. Everything. There's nothing stale here. We always have fresh bread. Market has to go up to a premium for what? Only two reasons. It's going up to take the buy stops, or it's going up to some inefficiency, some gap. Markets only go down to go to an inefficiency, a fair value gap below current market price, or it's going down for sell stops. I do not care. This is no disrespect to anybody else out there that teaches and made money. I don't give a flip. The markets don't go up and down because your indicator said so. The market doesn't go up and down because there's momentum of buying and selling pressure. That is not what is going on here. Okay, it's never been that way, but we have been led down the primrose lane with books, authors, teachers, whatever, saying that it's buying and selling pressure. It's not. These markets are absolutely controlled. Period. This breaker. We have a low, high, lower low. Last up close candle, extend that in the future, hits it here, hits it here. My eyes don't, I gotta look at it and see. I'm not sure if that one hit it too. Yeah, it did. So it hits it here multiple times. Okay. Now, this breaker is not a supply and demand zone. Okay. Sam Seiden and those who follow him, if they were to see that as a demand zone, okay, now it's no longer fresh. It's definitely stale bread now. It's a crouton. They would never use that logic. Okay. My PD arrays, as long as the narrative stays intact, looking for higher prices, these PD arrays can be reused. Okay, their sponsorship doesn't expire simply because it's traded to it before. Look at the bodies of the candles. That's the narrative. That's the real story is in the bodies. The wicks do the damage. Yes, we wicked through it, but look where it closed. We traded down. Look at the bodies close right there. That's consequent encroachment. That's the midpoint of that gap right there. Here, let me make it nice and obvious. So 41.82 1/4. The open on this is 41.82 1/4. Oh, look at that. Now you're going to tell me, you're going to argue with me, okay? Dollar Menu Mentor, going to tell me that that's buying and selling pressure, that this happened to make that line up exactly right there. Really? Really? I'm sorry. I'm sorry that nobody told you in books before me. I'm sorry that you can't find it on your own. I'm sorry. But you have it now. So stop wrestling with me. You guys, you make arguments against me when I'm telling you something that works phenomenally and how these markets really book price. Invariably, I get some goober that comes in there and will say, like, this is never done in advance. You're making this stuff up. It doesn't work. It only works sometimes. Well, that's true for you because you don't know what the fuck you're doing. But I know what I'm doing. And in inversion fair value gaps, I know which fair value gap is going to be inverted. Here it is, folks. And I've shown it to you on a 15-second chart. Like, you can't get any plainer than that. It's real. It's absolutely a real phenomenon. It's really there. But you know what makes it valid and how to predict it? Understanding liquidity, understanding time and price. That lunch hour that nobody goes to lunch, the algorithm runs on that liquidity. And then it starts repricing and spooling to the next pool of liquidity. So since it took sell side, okay, what did I teach you? Price only goes up to take buy side or buy stops. Or it goes up to an inefficiency above market price. That's the only two fucking reasons that price goes up. Period. End of story. I don't care how many years you've been trading. You can call yourself a market maker. I don't care what institution you work for. You banked at this one. You did this trading for that one. You manage funds. I don't give a shit. Price only goes up for one of two reasons. To go up to an inefficiency above market price, or it runs up for buy-side liquidity, buy stops. That's it, folks. That is it. It's not going up because of buying pressure, and it's not going down because of selling pressure. It's going down for inefficiency below market price, or it's going down for sell-side liquidity. Period. End of story. That is it. If it's not doing one of those two things, it's going sideways. Me looking at it up here, okay? This upper left-hand corner. What's the high of that candle right there? 15,652.75. What's the quarter level? 15,652.75. Find that in your fucking supply and demand. Okay? Find that in Wyckoff. Find that in Algo Box. It's not there. Okay? All that stuff, folks, all that stuff is nonsense. That's not the real market. That's you trusting a religion of indicators. Some kind of archaic bullshit theology has absolutely no bearing on how price is going to go up or down and why it's going to go there and what time it's going to go there. I know I'm pissing people off and I don't care. At 9:30, the market rallies up. Where are the bodies stopping? Are they being controlled? Absolutely. Is buying and selling pressure. Everybody that's using everything that's available in terms of retail logic. Everybody's coming together with all of the randomness. How many traders are going to trade with supply and demand at that time? How many traders are going to trade with harmonic patterns? How many people are going to be trading Wyckoff? How many people are going to be trading just simply support and resistance? How many people are going to be using GAN, Elliott Wave? All of them are going to be doing something different. And yet you are going to believe the bullshit that people say that the markets are absolutely random and nobody can know what the market's going to do. When I'm telling you that we're looking for lower prices, we can trust that it's going to be lower prices if the bodies, which is what tells you the story, are the bodies respecting this 15-minute buy side, 15-minute city? Yes. The algorithm works from the higher time frames down to the lower time frames, and then it cycles right back up again. Because it's because it's an algorithm, it's running a macro, it's a script, it's constantly looking for these. And that's what's going on. It's not buying and selling pressure. You're going to sit and tell me that what we were doing yesterday live, when I was telling you those little tiny little minute discrepancies between three candles that create a volume imbalance or a fair value gap, that just random buying and selling pressure happened to align with those very specific turning points right to the tick. That's what you're going to argue. It takes more faith to believe that bullshit than it is that this is all rigged, it's controlled, it had an author, and all these things, these factors are repeating over and over and over again. If the markets were in fact random and we don't know what the buying and selling pressure is going to do, how could it be possible that we as students with this mindset can go in and anticipate these very things happening to this degree of precision? That's unfathomable. It would be impossible. Randomness would cancel that out. It would literally cancel that out. But yet it doesn't. It supports it. But if we're bearish, we want to see it fail to be efficiently delivered back up to that level. Because if it does that, it's indicating by default that it is underlyingly weak. Not that it didn't have enough buyers. Not that the sellers came in too much. There's no fucking buying and selling pressure. That is a myth. It's a fucking myth. You're worried about trying to figure out what the buying and selling pressure is. The whole time you're watching the left hand, the right hand's doing the sleight of hand. That's what you're doing. You're falling victim to this shit. And I'm trying to tell you, this is what's going on. Focus on these things. Stop looking at the distractions of bookmap and fucking level 2 data, DOMs, volume profile, all that bullshit. It's bullshit. Stop looking at that stuff. You're being distracted. You're never going to pay attention to the details that matter if you're looking at that dumb shit. None of that fucking shit works. None of it. If you did something that made money, you're subscribing to that as a fucking religion. You believe that that was the catalyst for you being right. And you believe it. And you keep telling yourself, but that had nothing to do with why price did what it did. I swear to you, there is nothing on my fucking monitors that are telling me secret information. I'm literally reading the open, high, low, and close at specific times under the pretense that it should run to liquidity or inefficiency based on a narrative that I literally walked you through minute by minute yesterday live. That's what it is. There is a team mentality, like a tribe mentality. Like our community gets a lot of flack because we call bullshit on everything else. We don't think anything else has anything to do with why price is going up. And that's because they say what I have said and I have proven. Not at one time, but for years, to a degree of precision that no one else is able to do. That's why my opinion is that everything else is nonsense. I'm not stating that anyone else's methodology or their approach to trading can't be profitable for them. I'm just saying the root cause of why price is doing what they believe it's doing has absolutely nothing to do with what they're subscribing to or what tools they refer to. It's literally time and price only. Inefficiencies and liquidity. That's what goes on. That's what these algorithms are referring to. They the algorithms that are pushing price around, they're not cycling through a bunch of retail bullshit and what they're going to use today. What's the flavor of why we're going to make price go up today? Is it going to be LA wave? Is it going to be supply and demand? Is it going to be support and resistance? Is it going to be moving average crossovers? There's no way that there would be a way for that to be systematic in choosing what school of thought we're going to use, because every fucking single one of those things are not in agreement. They don't all agree. If they all agreed, 90% losers wouldn't exist, would they? The statistics are 90% of traders lose. So if all those things worked and everybody trades with the same bullshit, everything that I'm doing, they say I renamed. If that's the case, then why the fuck is my shit worth 90% plus and everybody else's stuff doesn't? If I just renamed it. I'm saying that facetiously because at some point, and I said this morning, at some point you have to concede and realize that what we're showing you here is the market. This is it. This is the source code. This is the shit that you don't know about, and nobody else out there can replicate it with retail bullshit. It doesn't work. It doesn't cut to the core truth of what makes price go where it does, where it stops to the tick, and then does what we're expecting it to do. How many times can someone be consistently accurate with precision like this and use something outside of what I'm trying to teach you? And it's not linked to anything else.